Okay, I'll start with the portfolio tracker. Everybody kindly mute yourselves. If there is any question, then you can unmute and ask, and then just go back to mute again. So that will be good that way. This you can ignore USD INR for the moment. This is part of a different test that I was doing, so it is not part of this particular tool. So that I mean, we are enabling USD INR also in this coming week. So you'll be able to take a look at this at that point. For now, you can ignore it. Yeah, to begin with, in portfolio tracker, these three tags that you see, live trades, paper trades, and miscellaneous trades, these are actually nothing but a way to group your trades. So you can group, it is just to visually, you can separate your live trades and your other trades into different categories. You can call it tag, we call it tag. So you're just grouping the trades. I mean, it's not like we are going to send the trades live for execution and all that from here, nothing like that. All these trades are same, exactly same. You're just tracking the trades here, and you can group the trades differently. So you can separate the trades the way you want. So we have given three tags for those. And to begin, you'll have to just click add trade and then select whatever symbol that you want over here, and then select your expiry, whatever expiries that are currently active. You'll be able to view those over here. Then select the expiry. If you want, give a name for it. Otherwise, a random name will be given using the symbol. So symbol, current price, date and time will be used to create the name for it. So you can give a name if you want. Otherwise, you can just straight away add the legs over here. Say you're buying a call. You select this, select number of lots. Then this by default, if you are buying, then ask price is used here. If you're selling, bid price is used, because generally those are the prices that you will get. So if you want to change whatever price you have executed your trade at, you can change the price here and then add it. So the leg will get added. Similarly, say, I'm just entering something. So this you can, again, the prices for sell obviously is taken from the bid ask again over here. 52.1 is taken. The bid is taken for sell. And once you have added the legs, you can click on analyze trade to view the chart, payoff chart. And this profit and loss is shown based on current price. So the difference is there. That is why it is showing this. But generally in live market, when you enter a trade, it will be mostly just slightly negative. So you can change whatever price, your execution price, whatever it is. Here at the moment, we are showing you max profit, max loss, maxed risk reward ratio, and break evens. Now, next coming week update, we are giving break evens for both the expiry and the break even for the T+0 line. This is the line which shows you your current profit, current projected profit at the moment. This is based on, keeps changing based on the IV. So it will be slightly different from what is your actual profit or loss. So it will be slightly different because it will be based on the IV. It will be fluctuating. So whatever is the net debit, which is your long premium minus short premium, that is your debit. And this margin and premium is, we still don't have it. We don't have it available because we need to, I mean, the exchange has not yet given us. We need that. I think there is a special software or a way to compute the margins. We are still trying, exchange is not given us. Once we get this, we'll make it available. And in the next update, as I said, you'll also have break-evens. Another break-even will get added for the T+0 line. So this is it. Here you can, that blue line that you see will tell you what is the current status. Now, if you want to simulate, I mean, what is going to happen if the price goes up by 1%. So you can change this and you'll immediately see this projected PL will tell you where this current price is. So 1% price goes up, what happens? And 1% volatility also goes up, you'll see. Or you can increase the volatility, say 5, 10%, 10%. So you will see how much the profit and loss changes. And if you want to see if price has gone up by 1% and volatility has gone up by 1% and the day also has passed 24 hours from this particular moment. So this is not like if I increase this by 1 day, it doesn't mean that this is by Monday, that is tomorrow at close of the day. It means whatever the time period. If you are looking at this chart live in the market at say 11:30 in the morning, and if you increase by 1 day, it means that next day by 11:30 in the morning, what will be the profit and loss? That will be shown here. And this, if it is 11:30 and you're saying on the expiry day, it shows expiry day 11:30 in the morning. It is not expiry day at the end of the expiry. So it just adds 24 hours. That is what this is. You can just reset this and it goes back to the current status. So you can, this is what is about portfolio tracker. Now, if you can, this is by default, whatever tag is enabled, that tag is where the trade is tagged by that tag. So if you want to change, just uncheck this, check this tag and say, you can say that this is actually a paper trade. So then it will just ask you if you really want to change the tag to paper trades. Say yes, it's gone from here. It will be in paper trades. If you click here, this is there over here. So this way you can group it. You can also say, like, I'm going to say, uncheck this and say, this is a miscellaneous trade, some different category. So now paper trade, miscellaneous trades. So just a way to group the trades. You can just move the trades under these tags. So you can easily group those if you want. And once a trade is over, you can say, let me go back here and I'll just exit the trade here. Say exit the trade here. Now the trade is over. It's gone for me. It is over. So what you can do is you can select any of these trades and then say just archive the trade. Once you say archive, it is gone from here. So it will be there in archive. So now only your, again, live trades are there, miscellaneous trade is there, paper trade is gone, that's it. So it has gone into archive. So you're looking at active trades. If you want to view archive trades, you can click here. If you click archive trades, if there are lots of trades, this will just take a few seconds to load. So if there are too many trades, so here all these trades are here. So the trade, this was the trade that was there. So if you want, say, uncheck the trades here, and what you can do is you can go back and just select here, and you can say make the trade active. So selected trades, now that trade has become active. So let this refresh, it is going back. Now go back to view, you can say go back there, this is archive trades, you can go back to active trades here. So that trade has again come back over here. The trade is back here. I'll close this, so this is still closed. Okay, miscellaneous, sorry, this is the one. This is that trade that was there. I will just change the tag back to live. I've just taken it over here, back over here. Okay, so this is it. Trades, no trades here. So this was about it. Let me just delete this trade. Okay. Now, any questions you have about this? Yeah, this one thing that I want. Let me take this one. This is a butterfly trade, and here one more thing that I want to show is now these Greeks. By default, the Greeks that you see are just a minute. The Greeks are actual Greeks, Greek of the option multiplied by the whatever the quantity is. Just a second. Why is this? 1 minute. Hide controls. Okay, here, if you want to see the Greeks in rupees, you can click this. So once you click this, then the delta is going to be like whatever is the Greek of the option. That is what, sorry, whatever is the delta of the option here, that delta is multiplied by 50, and then you get this. If you uncheck this, you get the actual delta of the option multiplied by the quantity, because these are 2 lots. So this is multiplied by that. So that is what you get. If it's only a single, let me add that trade. Let me quickly add this. See, now I've added this and its delta is 0.48. So if this is unchecked here, it just gives you the delta of that option. Now, if it is increased by 2 lots, then the delta gets multiplied by the number of lots, and that is what you get. So, sorry, it's updated now. So this was into 2 lots, whatever is the delta into 2 lots, because this is 2 lots that you get. But if you click this, even lot size gets multiplied. Lot size is 25, so that also gets multiplied, and that you get. So this is the rupees, actual rupees that you see for delta for every 1 point change in Bank Nifty. So that is what the delta tells you. So this will multiply that. If you don't want, if you just want to have the Greeks, then just uncheck this. And if you want to completely hide the Greeks and want to just compact the display, so you just hide the Greeks. You will still see the total position. Of the total position, you will see the deltas, all the total summary of Greeks over here.
Mr. Srikanth.
Yeah, tell me.
Look, I'm Rakesh Agrawal calling this.
Yeah.
सर ये बताएं, आपने जो ट्रेड ऐड करने का दिखाया, इस ट्रेड से एग्जिट कैसे करेंगे?
अब जो एग्जिट जो करना है, ईच लेग ऑप्शन को पूरा का पूरा एग्जिट एक इसमें नहीं है.
सपोज वन सिंगल को, सपोज 36000 कॉल, यस दिस वन.
हाँ, दिस इफ यू वांट टू एग्जिट दिस, ये
प्रॉफिट बुकिंग या जिसको कह सकते हैं कि ट्रेड को स्क्वायर अप करना.
हाँ, तो यहाँ पे ये ईच लेग पे ये बटन क्लिक कीजिए, एग्जिट लेग के लिए. तो यहाँ पे आप आपका एग्जिट प्राइस टाइप कर सकते हैं. बाय डिफॉल्ट ये बिड प्राइस दिखाएगा एग्जिट के लिए, लॉन्ग एग्जिट के लिए. तो अब जो भी है यहाँ पे सेव कर देंगे तो ये एग्जिट हो जाएगा, क्लोज हो जाएगा. ये कर. और ये आपको अगर बाय मिस्टेक आपने ये किया है, ये फिर से करने के लिए आप यहाँ एडिट कीजिए और इसको 0 कर दीजिए और सेव कर दीजिए, तो ये फिर से एक्टिव हो जाएगा. तो ये पूरे आप तीनों के तीनों क्लोज कर देंगे तो ये पूरा एग्जिट हो जाएगा, पूरा का ट्रेड एग्जिट हो जाएगा पूरा. और ये आपको पार्शियल भी कर सकते हैं आप. आपको आधा अगर करने का है, ये आप 50, ये 2 लॉट है, आप सिर्फ 1 लॉट भी एग्जिट कर सकते हैं. यहाँ पे 1 लॉट एग्जिट हो गया, 1 लॉट एक्टिव, तो ऐसे भी कर सकते हैं.
इंट्राडे और डिलीवरी सभी में कंटिन्यू कर सकते हैं इसको?
हाँ हाँ, कर सकते हैं. एग्जैक्टली सेम लाइव पोजीशन ट्रैक कर सकते हैं.
Hello, sir.
हाँ बोलिए.
Sir, if I book part of the strategy, will that booked PNL show in the PNL?
Yeah, it will be reflected properly.
It will be reflected in it.
Yes, it will be reflected properly.
Okay, thank you.
Because now if you see 20,322 is the profit here. So
Correct.
I'll just exit one leg here. One leg I'm exiting. So if
Huh.
you see that has got separated, that
Okay.
profit has got separated. So it'll properly reflect everything.
Okay, it'll reflect as part of that strategy, correct?
Yes, yes.
Or
Part
it'll
of
become a separate trade.
that leg will no. It is same. You're managing the whole strategy that way. So it will continue here itself. So
Okay.
this yeah, profit has got separated, and it'll continue. The trade will continue in
Okay.
this only. Yeah.
All right. Thank you.
Yeah.
मिस्टर श्रीकांत, तो ये सबसे टॉप पर जो एड ट्रेड है उसके पास में एक आई बना हुआ है, उसका क्या meaning है?
ये सिर्फ इसमें आपको इसके बारे में, ये फंक्शंस के बारे में पूरा दिया है हमने शॉर्ट में, जो इंफॉर्मेशन है.
थैंक यू.
Okay. So any question about portfolio tracker, or do you want me to discuss anything about the strategies over here? Let me just quickly, this is just a sample strategy. Like this is started as a butterfly. So what, I mean, I don't know if you want me to discuss, I'll discuss about the trade also. If you, any and how to manage and all that, do you want me to discuss, or do you want me to proceed to strategies? What do you want to do? I'll just continue the way you want me to do, whatever.
That's the strategy, sir.
Okay, so let me quickly, yeah, take a butterfly strategy to begin with. Now, suppose this was started about on Friday actually. So, and the market has moved a little bit after that. What I've done is this is a call butterfly that I started a little bit above the money. So where the price was this way, it was like this. Price was over here when I started it. I've started it this way. So the idea is to adjust once the price moves. Then I would then adjust based on that. So the way I started it, when the price was over here, I initially bought 36K, where the price was, that particular call, 36K. The price was at 36K approximately. So I bought that call at this particular price, and approximately half of that price, I've sold these two lots. So bought a kind of at the money, you can say at the money option over here. For half that price, I've sold two lots over here. It is approximately half. And then whatever the difference is there here, over here, 500 points, another 500 points I added and bought another hedge. Now, once the price moves, now like price is over here, let the price move over here. And once the price goes a little bit above this, beyond this break, I wait for this. I wait for it to go outside. I don't adjust right at the break even, expiry break even. I let it go a little bit outside over here. And then I just, what I do is, these two lots that I have, I separate out, like I say, I will book one lot over here. Sorry. Oh, these are, sorry. This is two lots. I started with two lots. These are four lots, and these are two lots. So this is because I have started this way as an example, because then I want to move, I can move two of these lots outside. So I'll just book two lots here this way. I booked two lots, and then what I can do is I can move this about 200 points up. I add another cell called 36.7. So two lots over here. This way. I change it this way. Once the price has moved, I do this only when the price has moved out. So basically, since price is going up, then I'm reducing the risk on the upside. So upside risk is reduced. Automatically, downside risk is increased. So initially, it was equal risk on both sides when you initiate a butterfly. But since the price has now gone outside, above my break-even price above, so I would adjust this way, so and reduce the risk on the upside. Always focus on risk and keep lowering your risk basically. So once this happens, and once the price still keeps going up, then you can see what else you can do. But for now, your risk has reduced significantly. So this is how you can probably adjust and do it. The thing is, it would be really good. I mean, we still have to add it. If there is a simulator, I could actually simulate and show you like what would happen when the price moves this way. This is there, but I mean, it doesn't actually let me step through the trades like for example, in Opstra or stock market, you can go and simulate how price moves. We still need to add that functionality, and we'll probably do it soon. So, but this is how basically if price moves this further, then at this point you still need to do some more adjustments. You can still move, but I think the scope will be gone. You can still move a little bit more up to the upside. So instead of this way, you can move, and then upside risk you can reduce it completely. So this can be done, and then you can let the price go up, or if this the profit here might be very less, but the idea is to this when you initiate a butterfly, the idea is to I mean, you would be assuming that the price would be within this range only, but since price has gone out, then you have to manage and reduce your risk significantly, and whatever little profit you can grab, you can grab from here. Now, if this keeps going further, and obviously this profit is very less, what you can do is here another option that you have is, now think of your butterfly as two spreads. One is a debit spread on this side and a credit spread on the upside. So what you can do is this, whatever debit spread is there, when I say debit spread, what was the earlier trade here? 36,000, 36.5 and 30 and 37. So 36.35 call. This is a bull call spread. And 36.5 and 37. 36.5 and 37 is a credit spread. So this bull call spread that is there, you can add one lot to it if the price keeps on going further ahead. Now what I've done is add one more lot over here, and then 36.5 also add one more lot over here. I've added more, so this will increase. Your profit here will increase, but you do that only when the price has significantly gone up. Until that time, first step will be from butterfly, make it this way. You get two of the I had initiated 4 lots here, so move 2 lots here. Your risk will reduce, less risk will be there. If it keeps still going up, just take it a little bit more up. Make sure that it has to be below this only, below your buy. There is a buy over here. There is a buy over here. So you can only move a little bit more. So move it a little bit more. So this will come in slight profit. I mean, this will come into green. And price still keeps going up. At that point, add this bull call spread. Just add one lot more. So this one lot I've added for this and this. I've added one more. Now you let it go now, because your profit also will be decent. So you can let it go, wherever it goes, it is fine. Now from here, if it jumps back over here, once this particular buy price is crossed over here, this is your buy leg is there over here. This is your 37,000 leg. Once the price comes back into this, the first thing you do is this bull call spread that you had added, close it off. So then whatever, because once you are adding, whatever you're doing additions over here, you are increasing your safety over here. The risk here is increasing. So once the price comes back inside, the first thing is you'll have to reduce your risk here. And how you do that? You just undo everything that you have done. First thing is the last thing that you did is you added this bull call spread. So undo that and just close off this position. So then again, here your risk will reduce, the profit will reduce here, but your risk also over here also will come down. Now from here, if it comes back over here, maybe comes back until over here, then again do the same thing. You had taken this to about 38, this 3800. Go take this back to 37. Take this back to 37. Again, your risk will again get reduced here. After that, it still keeps going over here. It comes back over, say comes to over here. Just bring this back from 3700 to 36.5. Go back to your original spread. Once you're back to original spread, once it breaks over here, do the same thing what you did on this side. What you will do, once this gets and price goes over here, then again from here you're at 36.5, you were at 36.5 over here. You are at 36.5 over here. Take it to 33, 200 points down. Then again 100 points down if it keeps moving here. If it keeps going, add this top spread that was there, 37, 36.5 here is your credit spread here. Now this side, it is credit spread. So that credit spread, you will add one more set over here. So then the way it has become over here, it will become on this side. So that is what you do. So you keep managing wherever it is going, you just do these steps and you'll be able to manage this very well. Now, another thing that is there over here. Now I've totally messed this up. Let me just remove it so I can explain what I want to explain. I'll just delete this, and I'll undo this. So this is the original spread, and let me reset this over here. This is the current status. Now here, there's another thing that you can do. What you can do is, suppose nothing like what we have discussed, price does not go here, here, here. It doesn't keep going here, or it doesn't keep going here also. Now, next 2 days, suppose the price just remains in this range. So what is going to happen? Your only time has passed. So we'll say now 2 days have passed. 3 days have passed. So now this is in profit now. Your trade will be in profit. So at this point, what you can do, once the trade is in profit, your outermost legs, the outermost both buy legs, what you can do is you can just get them inside. You can move those inside a little bit. That is one. Or what you can do, on purpose, what I have done is I have initiated 2 lots, or whatever number of lots that you initiate even lots to begin with, either 2, 4, 10, 20, 40, 50, whatever. So half position you can remove. Whenever you are in profit, to book profit, you can do 2 things. You can reduce your positions this way. Now this is 2 lots each, so you can remove one lot. That is 1 lot from here, 1 lot from here, and 2 lots from here. Just 1 minute. Let me remove this, and I'll say this is the original position here. So here now, suppose this is in profit. What you can do is you can just exit one lot. Exited this. I'll exit this also, 1 lot, and I'll exit 2 lots from here. Now, once you remove this, once you are in profit, what will happen is your overall profit on, loss on this side will get reduced significantly. I did not check it earlier, but this both sides loss will get reduced. That is one way of doing it. You can do this only when you have your whole position is in profit. We have already discussed what happens if position goes into loss, because once this goes over here, you will be in loss. So then you know how to adjust. But if it is in profit, and if only days have passed and your curve has become this way, and you are in a little bit of profit, then you can exit half the position. This is one way to do it. The other way is to, let me just undo this. Okay, this is the original position. So that was one way you can reduce, you can cut the position into half. So, and you can book the profit, and the rest of the position you can continue. And if it goes up above this or below this, you can do the same adjustments. And the other way is to bring the this closer, these buy strikes closer. That is also one way to adjust. If you don't want to cut your position in half, you can do that. So what you can do is exit this, and say I'm from 36, I'm going to 36.2 by 36.2 this way. And on this side also, which was 37, I'm closing this, and that I have to bring it down from 37 to again 37 to 36.8. 36. So from both sides you have got it. This also is a similar way to reduce risk. Let me reset this. So this also will reduce. This will work only now. It will not show correctly, obviously, but if you are in profit, if you are significant profits, if your profits are more than your initial debit of this trade, initial debit, if you 1 minute, if have I done this correctly? Yeah. If your profit is more than initial debit of the trade, once you bring the buy strikes inside a little bit, usually what will happen is this will become a risk-free trade. Both sides will be in profit, and you'll also have some range over here. So it will become a risk-free trade. But that you can do that only when your the position is in profit. Until then, you cannot do that. So this is the whole thing. I mean, how to adjust once it goes above, how to adjust once it goes below. If it is only does not go anywhere, if it does not go anywhere and it remains inside over here and it turns into a profit, then what you need to do? You can either cut your position in half, or you can bring the buy strikes closer. So this is about the butterfly trade. This is the whole sequence of it. If you practice all these, I mean, it will be very easy to adjust the whole butterfly trade. I have completely messed this up. I'll have to I'll adjust this later. So this was about butterfly. Any questions about this? May have been confusing, but let me reset this to original. Any question, or was it totally confusing?
Sir, how do you decide that you'll do on ATM or above ATM? Selling the.
You can. It is what you can do is I generally based on where the I mean how the market is. Let me go there.
Just one more question to that.
Yeah.
Iron butterfly, we can do it, by selling a straddle, short straddle, and buying an edges of the side. In this strategy, you are, selling only the calls.
Yeah.
So what is a major advantage and disadvantage? Because I'm seeing both the methods. Could you please explain me on that part?
It would be. It is actually. I think it would be the same. Actually, iron butterfly kind of thing would be a little bit easier, but there are few other adjustments and that I have not discussed, which would be a little bit easier if done when only calls or only puts are used. But I mean, you need not even do those adjustments. That's the reason why what the adjustments that I've done now will work perfectly well and exactly the same if you use an iron fly instead. Because iron fly, the separation of bull and call spread will be more precise. I mean, you will know exactly. I mean, there's no confusion there, because call side, put side. The put side will be usually like a bull put spread, and the call side will be bear call spread. So it will be clear cut, and you can add the spreads to adjust very, very easily. I mean, with this, there are different kind of adjustments that you do once the price goes way beyond the range. So, I mean, there's no point really discussing that. It will get confusing. This itself was probably confusing for many. So, but the effect is going to be, whatever adjustments I have told you about, the effect is going to be the same, whether it's a call butterfly, a put butterfly, or iron fly. It is going to be exactly the same. The same adjustments can be done. There is
So
no
during the VIX rising, okay,
Yeah.
or a fast fall scenario, so these buys will give me an edge. Is it right if we go in this approach? Because what are the buys I'm protecting? Anyway, those premiums will increase. The sell obviously will give me loss. So in
I
that
think
way,
in my trading, what I found is now if I'm using a call spread, I mean, it'll be a little bit, sometimes it'll be a little bit easier when the price is falling and I keep adjusting, getting these down because I've sold the calls over here. But then I feel that, and of course the call, since I've bought the calls, the increase in VIX also will be favorable.
yes.
And that was there, but I think if you see, mostly it will get countered, because in this case, if price falls and VIX shoots up, it will be advantageous to this, but it will be advantageous to this buy strikes, and it will be the other way around for puts. So that's also, I don't know. I mean, I don't think it will be a big advantage or anything. Even if you see in the case of iron fly, your hedges are going to be there anyway, so those will be benefited with a VIX rise in VIX. So that will be there anyway. So I don't know if it will be a big advantage using this, but you can take a look. I mean, I've not found that. I have found most of both iron flies and normal butterfly very similar actually in adjustment. No major difference is there, is what I found. The only thing is that in case of iron fly, the liquidity will be better, because what will happen is this is going to be deep in the money. And the liquidity may be once the price shoots up over here. Now this will probably become illiquid, and if you have to adjust this in any way, then maybe when you close out this particular leg, you will lose some due to illiquidity. So the bid ask may be very far away. So that will be a problem actually. So in that case, iron fly will be better because those are out of the money anyway. So whenever price goes too far away, the other side will become too out of the money. You can just exit easily. So that will not be a problem, I think. So that is the advantage with iron fly, but otherwise it is very similar. Any other question about this? Yeah, I'm not able to hear properly. Can you speak up? Yeah.
Sir, I think you said it maybe also, but apparently butterfly in a position will be have a less adjustment compared to iron fly.
Yes, I really can't hear you at all. It is very low.
A lot of disturbance.
Sorry. That question was clear? If you can.
No, his voice is not clear, sir.
Yeah.
A lot of noise.
I'm not able to hear you, sir. Not clear.
Sir, I'm audible?
A little bit, yeah, tell me.
Sir, as you said already, I think if we do adjustment in a positional, I think butterfly will have less adjustment compared to the iron fly, because we are managing that in like a trades only. Let it be debit or credit spread in a butterfly. Because the adjustment you said is more of a debit spread and credit spread adjustment, don't you, sir?
Maybe, yeah. I really don't. You will have to experiment yourself. From what I've seen not too much of a difference. That is what I feel. Other than liquidity, I don't feel any significant difference was there. Is what I think. That is my opinion. But you you can take a look. Your experience may be different, so that depends on. Yeah. Okay. Okay. Yeah. Any other question? Anybody wanted to ask?
Hello, Shrikant sir.
Yeah. Hi.
I am Sanjay Rai.
Yes, sir.
Actually, this my question is not related to what you are teaching. So should I ask the question or should I take it later?
No problem. Please ask.
Okay. Actually, is there any possibility to see a chart, option chart of two strike prices at the same time? One on the put side and one on the call side. I'm not able to find where to get it.
You can view it in FNO charts beta.
Hello.
So you go here. These are trading view charts. So you can arrange those this way.
Just take a minute, sir.
Yeah.
Hello.
So go to
Sir, how?
beta. Go to beta.
Beta. Okay.
FNO charts.
No. Okay.
Once you load, just change this over here. This.
Okay. Okay.
And select two charts the way you want.
Okay. Okay.
So once you do that, you will get two charts over here.
Okay.
So click on one side and click here. And
one
select
side we can take put strike price, and other side we can take call strike. Not a problem.
Exactly. Yeah.
Right. Thank you so much. I will practice it accordingly.
Okay. Sure.
So much for taking this question, sir. Thank you.
Sure. Okay.
Sir.
Yeah.
Can we apply dark theme on option chart?
Dark in the sense, or what was that about?
Dark theme.
Dark theme.
Yeah.
Dark theme. There is currently we don't have a way to apply on our website. I mean, we have not provided any such option. But in Chrome, there is I think there is a extension called as Dark Reader.
Okay, no issues. Can you tell me, can we apply AVWAP in new option charts?
Yeah, you can. AVWAP is there over here.
It is in beta version, na?
Yeah, beta version anchored VWAP.
Okay, not in option chart.
Not in option chart. Here it is not there. Anyway, this is going to go away. We are totally moving to this anyway, so you can use this.
Okay.
Yeah.
Okay. Okay. Thank you, sir.
Okay. Right. Anything more on portfolio tracker? Any different trade that you want me to look at? You want to look at?
Sir, you know, when we start of the month, you know, just I'm actually asking you, are you aware of or doing like this?
Sure.
Like, you know, monthly trade and weekly expiry. Okay. Can we differentiate two things? And when it is coming to the halfway, okay, can we modify that so that, you know, it will always give an hedge? Do you have any such type of strategies with you? Because right now we are in a very huge volatility situation. Overnight positions always risky. So we can call it as a diagonal spreads. But
yeah. Okay. Diagonal or calendar, right?
Yeah, generally they'll call it, but that is not giving a hedge, sir. Every time it is giving a loss. Whenever we are doing something, huge move is coming. These monthly buying are giving huge loss than the, you know, weekly decay. So are you faced any such issues recently?
Yeah. Okay. Yeah, this is a very relevant question right now, because currently, if you see, I'm looking at Nifty here, and if you see IVR and IVP, they're both very low. So I mean, this can still keep going low. So ideal strategies are calendars and diagonals. But what you can do is, now suppose now I've this is a at the money calendar that I've started. I mean, I just entered over here. So what you can do is, I think your question is about adjustments, because you will have to adjust at some point, because I mean, if it'll be excellent if price just keeps at the same point. If it remains, then obviously it'll be in profit very soon. I think once it goes beyond the range, that is where I think your question is about what to do at that point, because At that point, you're getting a loss, right? That is what you're saying?
Yes, yes. It's
Okay.
beyond my bear
Range.
so range. So immediately I need to book loss in the buy position.
What you can do is, I'll give you one example. What you will be able to do. Suppose now you have initiated this position and the price has gone up. Let's say over here, and ideally, let's say it has gone over here somewhere at the edge. At this point, you can adjust the trade. At this point, you can adjust the trade. What you can do is your sold option, just exit it. Exit the sold option. Say, let me exit this. And wherever the price is, the price is around 16,881. So round off to that 16,9. So add a 16,9 at the money. Add the money wherever the price is. Add the money. Add 2 lots. And sorry, did I buy that? You need to sell. Sell 2 lots and then buy next month or next week also can be done. Do it this way. Adjust it this way. So did you understand? 16.7, we were here. We were 16.7, we added a calendar. And the price has gone to 16, your range at the edge of the range, 16.9, near 16.9. So close your sold option. Close your sold option. Sell 2 at the money put options. And then at the same, buy next week or next month. Whatever your long option you have next week or next month you have selected, same, just buy another one. So basically, what we are doing is, we are increasing the range. Now you have increased your range. Your price has gone to 16,881, and you repositioned yourself to center again. Now what happens when price again keeps going up? It has gone here or maybe here, right now here. So what will you do now? Now what you will have to do is, whatever this top part is remaining, whatever the top part was remaining, you'll have to close it off. You close it off this 16.7 completely. Close off this 16.7 completely. Close off 1 lot out of this. 1 lot out of this also. Let me just try and this is a little bit difficult to simulate over here. We had simulator, it would be really excellent. So I've closed off this total top part completely, and this 1 lot I have closed from here. That was extra was there because that was part of this adjustment over here. Now I only have, what is there remaining? 16.9 is only remaining, and price has gone to 17.2. So now add 17.2. 17.2. Add, buy. Sorry, this was a sell. This way, it gets increased. So you just increase your range. I think there's one more thing that is missing here. So sorry, your 16.9, you need to close both. I'm sorry. Let me delete this. This were 2 options over here. This was 2 over here. This was not there. Buy. Am I correct? I think I've totally messed this up. Oh, no. Let me exit this. And 17.2. I need to. This is how it will become actually. I don't know if I've explained this properly. Did I explain this adjustment correctly, or?
No, sir. Just I understood you. We are keep on shifting the legs at the break even and buying the two things
Yeah.
and keeping the one.
What you need, yeah, the main, I think, let me, what I can explain is, I started with 16.7 and price has gone to around 16.8, so near
16.9.
16.9. So I've closed the sell 16.7, sell part of it, and I added 2 lots of 16.9 and then bought another 16.9 of the next expiry, because these are next expiries. All buying is next expiry or next week also. It can be next week also. So I've added two lots of 16.9 and I added, basically this cell I've moved to ATM and then I've added a 16.9 calendar. This is what I've done actually.
Why we are keeping the 1600 calendar buy position?
Because
open?
what we want, if price suddenly gaps down, we still want we want to cover some range. So that is a over here also. That is why I'm keeping a range below here, because if I just keep moving the sell leg, that is also fine, but you need to know that then the price is going to go up, because then what is going to happen is, let me just remove all this so that also can be explained. You can do only that also. Okay, this. Okay, now what have I done wrong? Okay, buy is.
Sir, put we have to remove, na?
Yeah, this should be, yeah, sorry. This should be exited.
980 should be removed, sir.
Yeah, I just wanted to go to initial and then explain. Okay, this I've closed and I add 16.9 was sell 16.9.
2 lots.
No, I'll just go with one.
Okay.
16.7.
Yeah, correct, sir.
Yeah, perfect. So because this is what would happen with the first adjustment. But then what would happen is, here you don't have any downside risk control.
Protection.
Risk protection is not there, because then this is fine if price is going to go up continuously. I mean, we don't know that, right? That's the reason why what I'm going to do is to add these 2 lots of this, then add basically adding a 16.9 calendar.
Yeah.
16.9 calendar. Now there's something I have done wrong, I think. Oh yeah, actually this would be visible this way, because only if price goes here you will be adjusting it. That's the thing. So okay, I mean, okay, let me go back here and then check this one second. This is still okay, what you were saying. Okay, still range is there. I mean, because price would be over here, range is there, but this will be too steep here for me. So this is, you can still do this adjustment if you want. You can just close this and just take this to ATM. You can do this. But I generally follow what I've just shown you. I do that because then it again becomes a calendar. At the moment, what is happening here is we are tilting the delta to bullish totally. That is what is happening here. The range is still there, so you can this is still okay. If price continues to go up, then probably you can do the adjustment that I was talking about. But what I do is I still, here the delta has become too steep. Delta is 23 here, because the price goes down here, then the significant loss will start immediately. So you can, this is just a little bit of adjustment that I do. I do it this way. I do it this way. So delta is still more, but range is there for me. And further adjustments, I keep doing this way, and I keep this at the price. I mean, this max profit position over here at the center. The aim is to do that. Aim is to maintain that. Of course,
How
when
would you
when
hand-
you're doing this, do understand that your risk is going to increase on both sides. So if you don't want, another thing is if you don't want to add to your position, add to your risk, then you don't have to do this. Then you don't have to do this. But what I do is whatever is my total maximum position that I'm going to initiate. Initially, I initiate only with half the position. Then I make the change this way, and then I'm at a full position over here. After that, I keep removing the older positions and keep adding newer positions. And then I get it. My aim is to maintain this position like this over here. If
Sir,
you,
what if the market reverses? How would you handle them after this?
exactly opposite way. I mean, you have to. This is again like you have what you have is a calendar again. So when the market goes over here, what you do is the top positions you close off this, and then you initiate this 6-7 back again, or wherever the price is. You will be at 6-7 actually. So this 6-7 you initiate back again 2 lots, and then you sell you buy a 16-7 again. So again you are back to center. Again you will be at centered at 16-7 this way.
Okay, sir.
Sir, second buying leg will be at ATM or the original?
Second buy ATM only. See, if you see what I did is 16-7 I closed. I sold 2-16-9 and bought 16-9.
Okay, so second leg will
basically. Sorry.
We adjust at the second ATM only.
Yeah, second ATM only. Yes.
At the break even, we'll do the same ATM.
Same ATM. See, basically 16-7 I have closed and added 1-16-9, and then I've added a 16-9 ATM calendar.
Okay, so 16-7 will be having more delta if we buy the same one also.
Yeah, no, but I do this because my aim is to keep this centered price at the center. So that's the reason why I do this. You can, if you want to, I mean, stay bullish, you can do it this way also. I mean, this was one lot. I mean, if you think that the price is going to go up, then you can keep it tilted. If you see, this is basically a bullish trade now. Here on the upside, the risk is less. So you can do this if you want to maintain a lopsided position, if you want to stay bullish. Because if price goes further up, what you can do is instead of this, you can more bullish if you want to be. You can do this way also. Now, if you see there is no risk on the upside, you can do this also. But then your risk is going to increase on the downside, and then you're basically tilting completely. You're saying that now you're very bullish. If you are really that bullish, then you can do this. This is also fine. It is not. So these calendars have lots of flexibility, but do all this kind of thing only when this remains low. I mean, once IVP goes hits 60-70 and all that, IVP 60-70, don't do these trades because it gets risky, because these are long vega trades. So you are long vega only when volatility is going to increase. Volatility is low and it is going to increase, then these kind of trades make sense.
Okay, with the low wicks we have to start, sir.
Yeah, start with low wicks only. Start in a low wicks environment. Low wicks in the sense, look at IVP basically. Don't focus on wicks. Focus on IVP. Once IVP falls below 40 and all that, you're fine to do this. You can do this.
Okay, sir.
So where would I see IVP?
Here, this is IVP. Or if you want to see for all scripts, you can go to IVR IVP.
Okay.
And here IVR IVP is there. You can sort it and see high. These are high IVP. Here you should not do calendars here in these scripts, because these you can, I mean, maybe earnings are coming out or what, I don't know, because these are crazy volatilities there. So VIX is very high. So here you can sell options. And if you sort it this way, all these low IVP situations, you can do calendars. Calendars are fine here.
So we should not see the VIX chart at all for calendars?
VIX is also fine. What because, I do is...
Sir, because VIX chart seems to have a breakdown and it seems like it's coming down more.
Yeah, exactly.
There is
I mean,
a trend line breakdown in the VIX chart.
it is fine. You can look at VIX. It's not that. I mean, I keep an eye on, and I initiate based on IVP mostly, because this will tell you relatively where the IV is. VIX is basically telling you where the average IVs are of different expiries of Nifty, basically. But IVP tells you where the IV itself is in 1 year's range, basically. So IVP, you look at VIX, but you also keep an eye on IVP is what. And basically, once VIX comes down, IVP also will go down, basically, because they are based on IVs, Nifty IVs anyway. So,
No, sir.
Could you please explain?
So actually, sir, my question, sorry,
yeah.
my question was that since the VIX chart has given a breakdown, should I look at calendar trades at all?
What you say is correct, because there is a chance that VIX can keep going down, so
Right.
which is detrimental to calendars. But I think the kind of IVP and IV is right now, calendars are fine, because you might have to do some aggressive adjustments.
Okay.
But there is a what this is saying is there is a good chance of a IV getting exploded. I mean, IV can explode to the upside. So at some point it is going to happen. So there is you need to start looking into calendar. Maybe you will not go full-fledged into this, but you will start adding a few trades. You will be considering few of these trades, maybe not heavy position size, but you can start with a small position size, because this will be now, this is the time to start calendars and diagrams.
Okay. Thank you, sir.
Somebody else had a question. Somebody was asking something. Okay, any question about these adjustments? So as I said, you can still keep doing this as price keeps on going. You can keep closing your sold option, and you can keep reinitializing the ATM ones. If price goes to 17.1, you can keep going. You can go to 17.1 also. So, and you can make this becomes a bullish trade, but of course price is somewhere over here. I mean, it will not look this pretty. I mean, this will be a little bit over here, because we are doing this because we are just simulating it. You should do this in actual simulator. You're doing this based on current price actually. So, but this is you can do this. Your downside will be risk will be increasing when you do this. But if you keep only single lot and keep adjusting, if you want to keep your overall risk in this position though, you can do this. Or you can initiate in half position, and then you can do the way that I do it. But the way I do it, I'm keeping the current price always near the center, because my idea is to actually just grab whatever decay that I'm going to get in these trades. So these kind of trades I keep doing actually. Even I avoid only when the IVP is really, really high. 70, 80 IVPs, I avoid this. Otherwise, I keep doing, but I do this based on the earlier adjustment I told you about. I keep it centered, because the idea is only to grab the sold profits. Actually.
Sir, maximum how many adjustments we can do? 3 times, 2 times?
3-4 times you can do if if you are doing it this way. Like if you are just tilting your data, you'll be making the delta positive. You can keep doing this, because at some point it will become like a vertical spread kind of thing situation. That you can do 3-4 adjustments. You will be at this position.
Double
you
quantity.
need not do after that. But the way I'm
double
telling,
quantity. Double quantity, sir. Your idea was better. Double quantity idea was better.
Yeah, once if you're doing it that way, initiate half quantity and then you increase it another, and you can go. Once you have full quantity, then don't you make 1 or 2, 3 adjustments after that. After that, it will get risky actually. So you can take a look once you do the adjustments, or you can simulate somewhere you know.
Okay, sir. And sir, one more thing. IVP we consider 30 below or some range to give. 30 below is low and 40 below is low.
Below 35, 40 is it
low.
starts to become low. Yes.
Okay.
Yeah.
So are you doing this on Bank Nifty also, or only Nifty?
I do it in Bank Nifty actually most of the time. Nifty also I do it, but mostly in Bank Nifty.
Okay.
So it is, yeah, it's fine. You can do it.
So Bank Nifty gives more freedom to do adjustments.
Yeah, and adjustment. Yeah, that is right. Even the actually we discussed butterfly. What will happen is, if you see, we are moving the short strike inside the butterfly, and with Bank Nifty you have more range to move. In Nifty,
At least
like
5 strikes, sir. 5. This has 2 strikes, sir. Bank Nifty is 5 strikes.
yeah, exactly. So you will have a lot more flexibility with Bank Nifty. That is there. Yes. So butterfly also, I'm doing mostly Bank Nifty, and even the calendars I do Bank Nifty actually, but I do Nifty also. So I do both. So it's not an issue. So if you see butterfly, actually I am in this kind of trade, similar trade. Basically, I was explaining this to someone, but yeah, the flexibility here is more because you can move your you can split these into two and move the strikes a little bit more because you have a lot of range here. So that's advantage is there with Bank Nifty. Okay, that was about this. Now, what else? What else is there? Straddles. I think somebody wanted to discuss straddles. So straddles. Yeah, who was that? You wanted to discuss about? Was it about straddle charts, or what was it about? Or straddles in general?
So Straddles in general will do. Idea of entering and monitoring with VWAP.
You're entering and monitoring with VWAP basically.
Yeah.
How exactly? I don't use VWAP, so I mean, I'm not sure what to explain.
Sir,
about
could you
that.
please explain more settings?
Sir, explain your ideas. Sir, explain your ideas only. No issue, sir.
Okay. Yeah. What was this about the settings? Somebody had asked. What was it?
It's me, sir, Ramakrishna.
Yeah.
I'm just seeing two different lines. So what are these three lines?
Yeah, this is what I generally use for these kind of charts, straddle spread. This is a Keltner channel with 53 exponential as the settings. The Keltner channel, 53 exponential as the settings.
Okay.
So basically I use this to follow trends in straddles, Ironfly, Iron Condor. If I'm using these strategy charts, basically spreads also, calendar spreads also over here, and Ironflies also. So the idea with straddles is straddles premium, overall premium is total premium is shown here. And the idea is to keep the price below the top bar here. So generally, if it breaks above this top channel, top line, then I adjust the strikes here. And then first I check and make sure that this comes back inside the channel. And then I go ahead and do that in my actual trade. Basically, let us take, say, to give you an example, I'll start with, just let me check where the price was. We'll step through, say we'll take a Bank Nifty, or we'll take a very difficult trade. So lots of adjustments will be there. Okay, when was the last expiry actually? This is 21st, so we'll start from 14th. Okay, we'll start from 14th. In Bank Nifty, 13th was the expiry. We'll start from 14th. And 14th was, it was around 34.8, 34.9 actually, 34.9. So we'll take a 35 straddle. I'll go to historical. 21st July. Say, suppose we have initiated a 35,000 straddle. We have initiated a 35,000 straddle on, say, 14th morning. 13th expiry was there. For the next expiry, we have initiated this straddle. Of course, I'll tell you that I was doing this a lot earlier. I did this until the March 2020 crash. So don't do this. After that, I've been doing only iron condors and iron fly or so. So stay hedged. Don't do this without the hedge, because it will be really get wild. But to explain the concept, I'll just go through this. Suppose we have initiated it over here on 14th morning for the 21st expiry. Now, your idea is to keep, if you initiate at the money straddle, then the price will be below these two lines anyway. So your idea is to adjust only when it goes above this, and that too, don't wait. If it happens just 5 minutes before market close, don't adjust. It should happen before the market close, so you have some time, because end of the market and beginning of the market. Now we have initiated it over here, and price, the first adjustment that you get is after 2 days on 18th afternoon. The price has gone above, so the price of the straddle is going up. So for whatever reason it is going up, we'll have to adjust it over here. Say at we are adjusting it at 1440 on 18th. So what has happened on 18th? Market has shot up like anything. This is at 1440 over here. Market is at 35.3 actually.
350, sir. 350.
Sorry. Oh, 1 minute. 1 minute. Let me. When did we initiate? Did I initiate it correctly? Yeah. Okay. Yeah. Sorry. What was that?
350, sir. 35, 350.
Yeah. Sorry. Yeah. That's right. It is at 35, 350 over here. 35. Almost like 1440 is, yeah, 35, 350 or so. Market has gone up significantly. So it is time to adjust. So you can do two things. If you're, I mean, this is a straddle. If you're in a strangle, then you can adjust call strike, which will be where the decay has actually happened instead of this, because this will be away from the market. So you can do that. For a straddle, you ideally just move this because the risky side, because this can shoot up really fast. That, or if you're closer to expiry, you could do this also and make it an inverted straddle. That also is fine, or whatever. This becomes an inverted strangle kind of thing, basically. So you can do that. But initially, after, if it is still early and expiry is far away, I just do this. I'm going to push this up a little bit and check this. I mean, there is no hard and fast rule. You can just experiment moving it 100, 200 points. So 18th, where was 18th, 1440, it's over here.
So what we have done here, so we change the put, means we are selling the put at the money again.
Yeah, at the money. Yes, you need to experiment a little bit. The idea is to make sure that the price stays below the band over here. So you take it at the money initially, or you can move only 100, 200 points, and whatever is the barest minimum required, you can. Or if you want to just, since this has gone a little bit further, this was almost up to 35.4, you can, this is more out of the money, at the money. So you can do this also. 18th is where? 18th is over here. So this will be a little bit below. So it is over here. So you can do, the idea is to bring the price below this lower line. Below this lower line. So you can do this. Start with at the money. This was at 14 on 18th, 1440 is somewhere over here. So this is actually beyond 400 actually. So you can take this to 400 and leave it. Now again over here, next day price again shot up at about this is at about 1110. So at 1110, the price is again 19 over here at 1110. It has shot up. It is over here. somewhere over here, 35,682. So you need to again adjust. Now, once I get this, well, first time I have got this up, I don't move this now. I generally, because this would have decayed significantly. So since to maintain the balance over here, because then otherwise this will get too imbalanced. So I move this over here. I'll move this to 35.5 or so. Sorry, not 35, a little bit below this. You can even convert it to a straddle. It's to you. Okay, this will not do. So you can just convert it this way. You can take it this way. Over here. This is where you are. This is okay now, a little bit fine. So again, this decays here. Next day morning, this shoots up again. So you will have to just keep adjusting it this way. Now this, what we have taken is a very difficult move. So obviously, see, this is 21st expiry over here. And we are doing it. We are adjusting it for this move. This is not going to be easy, obviously, because this is almost going to be like a almost 1,800, 1,500, 1,800 point move. So it is going to be very tough doing this. But again, over here, you keep adjusting. The idea is to somehow grab the decay. If market is even sideways, or if it is not trending strongly this way, straddle will obviously win out. Over here, I don't know. I mean, you'll have to check. You'll still be able to probably get break even or maybe even in profit. But you'll have to adjust and see. Here again, basically, you will have to move this further out, 36, and see. You'll have to do more. So you can take this also a little bit more. Basically, you are closing the whole position and moving it. The idea is to, with this, you for the rest of the day, you can hold it. And then next day, expiry day, you get the adjustment. So you are basically repositioning yourself actually. The way price is going, you are repositioning. With strangles, it will be a little bit easier. Now let us do the same exercise with strangles and see. Kindly mute, please. Kindly mute. If you have a question, unmute.
Yeah, we are shifting the straddle only to the ATM.
No, basically you're moving it first. Your first preference is to move the puts, right?
Winning leg.
Sorry.
Sir, winning leg, na? So this will be the winning leg, na? Put strike.
Yeah. Winning leg. Yes, exactly. That is what I've done. Yes. You can move the call side actually. Actually, this many have suggested me that put should be this side and the call should be this side. So we plan to do that when we convert it to FNO charts, because what is happening is here, this is really confusing. Let me go back. Let me go back because I've moved the winning side actually. I wanted to show it exactly the opposite way actually. But anyway, that also is a way to do it. Instead of we have moved the winning side, you can move the stress side also, the losing side also. Let us try. Over here, your first adjustment was on 18th over here, 18th, and price has gone up to 35.5. So I moved this outside. You would not even have to move that much actually, probably. I'm moving the call side. 18th, only that I've moved this a little bit, and that would be enough actually. And then again here, or if you take in the money, at the money, like we did last time. 18 here. So this would be sufficient. Now this time we have moved this. Now second step over here, 11.10. 11.10, we will move this. Let me move this a little bit and see. Not enough. It's exactly the same. So we have again made it a straddle over here. So once you do this, you don't have to do anything until here, until this day. Until this day, you don't have to do anything. At this point, 20th, was over here. It has gone way above, actually way outside our range actually. 36. You can take this to 36. Maybe get this to 35.2 or 35.3. Basically, you are repositioning the whole straddle. Over here, again, you will have to adjust over here. Market is just going up and up. We make this a straddle. This is not enough. At this point, if the premiums are not enough, because this is expiry day, you can convert this to inverted. Once you do inverted, this will be in control and you can grab a little bit of profits. So the idea is to reposition this. And from my experience, Strangle has been better. If you now let us do this quickly with a Strangle also, exactly this same. Let's say we have initiated Strangle, which is call is outside 35.5 was at the money. So say 34.5 over here. So this is 500 points out, 500 points out, 500 points out. Actually, what I do is generally a good idea is to basically check the straddle width and do it. Let me check historical 21st July. Say on expiry day for 13th expiry, 21st, it closed around this. So straddle width was about 800, 870. So on the next day, we are initiating on 14th. So I will assume it to be 800. So let me go 800 points out. So this will be 36.3. And 800 points down will be 34.2. So I'm 800 points out. So straddle width out. Now here, we have initiated in the morning. So immediately here itself, 14th at 12 o'clock itself, we have an adjustment over here. 12 o'clock. It's actually market is going down. So we'll have to adjust it here itself. With Strangles, it depends a lot on the volatility since market has gone down and probably volatility has gone up. This has got affected a lot. So here you could bring this down. Call side, I'm getting it down because market has gone down. So a little bit more probably 35.8.
So can you hear me?
Yeah, yeah.
So what is a core from sir? We need to move the winning leg or bleeding leg?
Ideally, move the if you're in a straddle, move the stress leg. In this case here, for the Strangles, what I'm doing is since this strike is far, I mean the stress strike is too far. I'm not moving that. I'm moving the winning leg actually over here. Either way is fine. It is your preference. But for straddle, since the risk can increase significantly on the stress side, I have moved the stress leg last time.
I struggled. I'll explain my example, sir. So I used to do in the similar way, but actually when the market is moving one direction, especially falling way, okay, when it is falling, my call will premiums will go slow because the IV is rising in the fall market.
Yeah.
So when I'm moving it, my bleeding on the put side is more. Even though as much as moving, still I'm unable to adjust and it is always in the loss only. Okay, that's one point which I observed. Okay, so if I do it oppositely, so okay, my puts are giving loss, bleeding. So if I drag my put to far OTM again, so what is happening, you know? So when the up move is coming, a small up move, the premium falling is very high. So in the puts, in the
Got
during
it,
the
got it.
downfall, sir, if a small up candle of 10, 50 points during the candle itself, the put premium will fall very high aggressively when we compare. So that both the sides I'm getting punishment. So any resolution for that, and so how we need to adjust at that point?
Very, very difficult to say because that is going to happen. And from, I mean, I've traded naked strangles and straddles earlier. I have not traded for the significantly in the last 1 or 2 years because I've totally moved to iron condors and iron flies. So even using the way this method is, because there it'll definitely be far more easier for you if you are using iron condors. If you're still doing it this way, the only way I would still say move the call strike. If market is going down, initially start moving call strike itself. If it continues going down, because what I do is first time I move call strike if market has gone down, but after that I'm just going to move put strike anyway, because this will definitely get hit significantly. And so I move this anyway. I mean, whatever is the case, reduce risk immediately and then worry about whatever decay profits and all that later. That is the way I would handle it. Even though, yes, VIX will really play a havoc when price is going down. It is always very difficult. It is always difficult. Price going up will always be a little bit easier to handle.
So on the same topic, what about the intraday? This is a positional, whatever you're trying to explain for us. What about the straddles or strangles in intraday? What is your thought?
If you're doing it this way, two ways are there. If you are aggressive, you instead of moving the strikes, you can add lots on the side which has decayed. That I've done an experimented a little bit. The other way is to just move these also and then even go inverted if required on expiry day. That also can be done. You have two ways to adjust there. You can increase the lot size also on one side. Whichever side is winning, you can probably initially you can add one lot over here. If market is going down, just add one lot on the call side. Then you can probably next step would be to move this down. Keep this one only and then move this down. And once it looks like the market has reversed or something, then just go back to straddle with equal number of lots, and then again start adjusting from there. Intraday, that would probably be a lot more comfortable because you are in front of the screen. You don't have overnight risk and all that, so you can manage with lots also. For positional, the trading this itself is a big problem, so it will be risky. So don't try to keep the same number of lots. That will be better. And ideally, just go with iron condor, even if maybe your hedges can be way outside. They can be way OTM. So, but you'll at least have some sort of hedge. So I think that will be better.
Sir, can you go to the beta tools and show me there is a one combined strikes, right? OA straddles, multi straddles beta. So what is your take on this one? Yeah. So
no, this is just to monitor basically.
No, sir. Can you please select all the 9? We'll see 9, right?
Yeah.
Sir, now I don't know. Just I'm actually asking you. So if I select VWAP, and whenever if the market, if I'm seeing in the money straddles are going up, means market is going up direction. If out of money is going down, so can we predict the direction with this? Because it's giving me some edge for me. Do you have such any clue?
I have really not monitored this. I mean, the way you are saying, I have not.
Because I used to do a lot of intraday straddles. Okay, both Nifty and Bank Nifty.
Okay.
So this is giving me better, understanding where exactly. Because if market is going up direction, out of the money straddles will fall. It is always below VWAP. And this is what happened. You can see, and if you go back historically also, we can because I don't know, but I understood like that. I interpreted in that way. So
let me take a look at this because I've not looked at this. I'll take a look at this, and maybe next webinar we can discuss this in detail. I can take throughout this week, I can monitor this, and maybe I can look at historical charts also. But I'll have to look at it in detail. Only then I can comment. I really don't know anything. I've not checked this.
sure, sir.
Oh, okay. Yeah. So anything about this?
श्रीकांत जी,
Yeah, बोलिए.
नहीं इसके बारे में तो नहीं, प्रश्न अलग है.
जी.
वो आप वो डेवाइस का निकालिए.
हाँ, मुझे 2 मिनट दीजिए. इसके बारे में अगर किसी को कोई हो तो मैं बात कर सकता हूँ और फिर उस पे जाएंगे. Anybody has any questions about this? Just one thing I wanted to highlight is Iron Condor and Iron Condor. It will be the thing is it will be a slightly different. Let me just quickly take a look at. I'll just quickly give you an example, and then we can go to other stuff. Let me 36.8 and then say 500 points out or 37.5. What was that? 35, 34.2. I'll say, yeah, I've taken far. Sorry, this should be 33.5. This kind of the same example. It's just that this was the strangle we had taken, if you remember, strangle that we had taken about 800 points away or so. 35.5 minus 8 was 36. Yeah, approximately something like that. This was a strangle we had taken, and I have taken hedges significantly further away. Now here the aim is how you'll have to design it this way that you have to keep the price above the band. That is how you'll have to do this. In this case, this is not the right. Probably, yeah. In the morning, if you are starting on 14, this is how you would have to do it, and then adjust once this goes here. Now here in this case, from my experience, I found that once you adjust the strikes, since hedges are available, once you adjust 1 or 2 times, the position will be set this way, and you will be able to capture most of the decay. This is what I have found. Of course, some 1 or 2 adjustments will be there initially, but once you do those, it will get set. If the price is going in one direction this way, the position will get set properly, and you will be able to grab whatever decay that is there in the short strikes. So you can take a look at that, experiment with it, and see. So that was about Iron Condor.
Sir, here also, are you adjusting the winning leg or the losing leg?
Generally, this is winning leg only. Actually, in this, initially, initial first step is the winning leg, and next step will be the losing leg.
Same way like the strangle only, right?
Yeah.
Thank you.
So this from my experience, because I've done a lot. I've done this a lot in last 2 years. From my experience, doing this Iron Condor is a lot more comfortable and a lot more flexible than a strangle here. Actually, using this particular concept, that is what I'm saying. Because once you do 1 or 2 adjustments, this will get set something like this, where the adjustments after that will be minimal, and it will get set, and you will be able to capture most of the decay very well. So you will have fewer adjustments using this particular setup than a strangle or a straddle. You can take a look.
Yeah. Can you do simulation of this Iron Condor?
Okay, quickly. Yeah, we can do this. This is the exact setup you would do for the same trade. 14th morning. Over here, the price has actually gone down on 14th. Over here, this was in the morning itself. So 34, it has gone down to 34.8. 34. So this call strike, which is the because price has gone down, I'll bring this down a little bit. I'll get this down to 36.5, because now here we'll have to get this above this band. Not yet. So generally, see, once I move this, if this is not doing it, then I move this also. Strike. Let us not move this. Let me just do this itself, because this has a lot of flexibility. Yeah, I've moved this significantly, about 800 points, and this has got adjusted over here. As long as it is above this, it is fine. So your next adjustment will be only on 18th afternoon, half an hour before market close.
Market above the lower band or in the band?
As long as it is above this band, you are fine. You can what you can do is, if you're not, I mean, you're not comfortable over here this way, then maybe that the prices, you would think that the price is going to continue to go down. You can adjust this also a little bit. This also you can move a little bit and get it further closer also if you want. I think
above the candle.
Yeah, sorry, I think I've done the other way. Sorry, this will be, you have to take this lower. Yeah, now this is gone further up, but even this is fine. As long as it is somewhere over here near the middle band, it is fine. As long as it is not very close to the lower band, you are fine.
Okay, at least above the center line.
Yeah, above the center line is fine, better. Yes. Now here you have got again at about a little bit before 3, you have got an 18, because as you see, the price has gone to 35.4 actually. So the price has gone up to 35.4. 35.4, which is, so you can move this now. This will be the winning leg. Take it to 35 and see. So this was on 18th over here. So you can do this. We have done the adjustment over here. The next adjustment is on the expiry date. It has straight away gone down in the morning, expiry day on the morning over here. $36.1 is the one over here. 36.1. So instead of this, what you can do is, now this is expiry day. This is now going to be like expiry day trade. So just make it a straddle. Just make it a straddle. It's expired. It's the same. I'm just adjusting it. It's the same. I'm just adjusting it. We are adjusted over here. Now this is, you can go inverted and do all whatever. And expiry, you will have to do it. Adjust it aggressively or just exit it. Basically, you can just exit here, or you can, if you want to keep adjusting, you can just based on price. Market has gone up like it is keep. Oh, when was the expiry actually? At 21st only, right? Yeah, 21st.
21st.
Yeah. So this is at 1140. So 1140. What was the price? 1140. It was at 36.2. You can go inverted. Basically, you can go inverted. That is the best way to do this. 36.3. That's it. You once one adjustment, you do it. You can grab whatever it is. Little bit of decay is left. Actually, it is a significant bit of decay. Actually. From here, 418 to 300, 100 points actually. Oh. The only
shifting data will be ATM only.
80. This will be around ATM only, because otherwise premium will not be there right now. This is basically, I've made it inverted basically.
To match the premium, sir.
Or basically ATM, yeah. So you can adjust, you can over here, since on expiry day you will be very close to the price anyway. So either ATM or even inverted and all that. Basically, look at the premiums of these two and then judge based on that. And these are now you can forget about this. They are nowhere near you. So you are basically adjusting you're adjusting straddle anyway, strangle anyway. So you
Yeah,
just
Strangle we are managing, but that's only a margin management, like Cesar.
yeah, that's it.
Hedges are for margin only.
Yeah, this is gone. This is only when you are initiating. After that, you can forget about these two basically. You can totally
And that we
forget
keep
about
at what you got the debit.
yeah,
That's far away to keep.
yeah, that's too far to even think about it actually. Now here you can manage any way you want. With premiums, based on premiums also you can adjust. Balance, keep the premiums in balance by maybe changing 2 lots, and also this also you can do.
Okay.
So all
With
that
lot size or
adjustment
the
will
premium?
come into picture. Yeah.
Lot size or the premium, either of you match.
Yes, that's
well.
Okay. Now I'll switch to somebody had a question about the Daywise. What was that? किसी के पास इसके बारे में कोई पूछ रहा था?
Chetan sir was asking something. Chetan sir.
Yes, Chetan, are you there?
हाँ, वो ओपन इंटरेस्ट वाला डेली का फ्यूचर में
कौन सा वाला?
हाँ, नीचे वाला डेवाइस वो है।
हाँ, ये वही है डेवाइस ना।
हाँ, इसी में है। इसमें ये हम लोग ये कंबाइंड ओआई जो दिखा रहा है अभी,
हाँ,
इसको अब उसके साथ अगर लोड को भी कर देते हैं तो एक्चुअल क्या आता है? हाँ,
बेसिकली
कैसे एक ही यूज करना है कि दोनों?
नहीं, वो तो ये तो आपके लिए सही। ये आप जो वॉल्यूम वगैरह जो है, वॉल्यूम ओआई वगैरह जो है, ये आपको लॉट्स में देखना है या फिर क्वांटिटी में देखना है? वो ये आपको वो सिर्फ वो बताता है बस। और ये कंबाइंड का मतलब ये आप ये जो तीनों के तीनों एक्सपायरीज जो होते हैं उसका सारा ओपन इंटरेस्ट ऐड हो जाता है इसमें। ये कंबाइंड ये जब एनेबल्ड होता है तो अब ये इसको निकाल देंगे तो अब ये सिर्फ ये वाला जो एक्सपायरी है सिर्फ उसी का ओपन इंटरेस्ट है।
अच्छा, वो कंबाइंड के साथ लोड करते हैं तो फिर वो लोड में दिखेगा, कंबाइंड लोड दिखेगा।
ये अब कंबाइंड है लेकिन लॉट में नहीं है। आपको लॉट चाहिए तो लॉट क्लिक करना पड़ेगा।
अच्छा, अब लोड कंबाइंड आ गया।
हाँ, कंबाइंड लॉट्स में है। पूरे तीनों के तीनों एक्सपायरीज के लॉट्स में है ये।
ओके, वो मैं निकाल रहा था तो कुछ टेली नहीं हो रहा था, बोला सोचा कि इस केस इसको अगर लोट में कन्वर्ट करना है, मान लो कि ओआई में है नंबर ऑफ शेयर्स में, उसको लोट में कन्वर्ट करना है तो कैसे करते हैं?
हाँ, बस यही है ये लॉट्स पे क्लिक कर दीजिए, जब ये पूरा सारा लॉट्स में आएगा, ओआई वॉल्यूम पूरा सब सारा लॉट्स में आ जाएगा।
अच्छा, अब मुझे एक इसको डिलिब्रेट कैसे करते हैं, मतलब कि इसमें ओपन इंटरेस्ट भी बढ़ जाए फिर वॉल्यूम डाउन हो जाता है तो
इसका सबसे मेन डायरेक्शन के लिए जो है ना, ये आप ये 5 दिन का जो बिल्डअप है,
अच्छा,
ये इसको मॉनिटर कीजिए। 5 दिन का जो ये बिल्डअप होता है ये आपको मोस्टली डायरेक्शन दिखा देता है। और उसके बाद
नहीं, लेकिन ये बीच में शॉर्ट बिल्डअप आ गया 8% का 5 दिन में 14 तारीख को।
नहीं, ये ठीक है, लेकिन ये आपको ये पूरा ये ओवरऑल डायरेक्शन ये दिखाता रहेगा। ये बीच में आएगा ये जो भी है। अब ये यहाँ पे वाई कम हुआ है, यहाँ पे शॉर्ट कवरिंग है, लेकिन ये आपको ओवरऑल डायरेक्शन तो ये दिखाता रहेगा। ये अभी भी यही दिखा रहा है कि अभी भी स्लाइट बुलिश है, थोड़ा बहुत बुलिश है, अभी ये दिखा रहा है। लेकिन आपको अगर एक दिन का देखना है तो फिर आप ये यहाँ पे आ सकते हैं। तो यहाँ शॉर्ट कवरिंग था, यहाँ शॉर्ट कवरिंग था, यहाँ लॉन्ग बिल्डअप था, यहाँ भी लॉन्ग बिल्डअप। इस दिन बहुत ही स्ट्रांग था पूरा। उसके बाद आप फिर ये थोड़ा शॉर्ट कवरिंग है, यहाँ पे थोड़ा वीक हुआ है, यहाँ पे फिर एक दिन के लिए बहुत सारा
तो वॉल्यूम से कैसे रिलेट करते हैं? मतलब
वॉल्यूम जो है जब आपको
मार्केट अप है, ओआई भी अप है, लेकिन वॉल्यूम डाउन है, मतलब 21 तारीख को देखिए आप 21
के दिन।
हाँ, अब ओआई भी अप है, प्राइस भी अप है, लेकिन वॉल्यूम डाउन है। इसको इंटरप्रेट कैसे करें?
इसका इंटरप्रिटेशन ये है कि ये जितना स्ट्रांग दिखा रहा था ओआई, तो ये उतना स्ट्रांग नहीं है। क्योंकि वॉल्यूम कम हुआ है इसका,
हाँ,
ये दिखाता है। तो OI भी बढ़ना चाहिए, वॉल्यूम भी बढ़ना चाहिए, तो फिर ऐसे ऐसे होना चाहिए, तो फिर बहुत स्ट्रांग होता है।
मतलब वो मैं 15 तारीख को देखिए आप, 15 को प्राइस बढ़ा है, ओआई डाउन है और वॉल्यूम भी डाउन है, तो
हाँ,
मतलब
ये तो
शॉर्ट कवरिंग वीक है ना, मतलब।
हाँ, शॉर्ट कवरिंग है, लेकिन ये वीक है ये बेसिकली। लेकिन ये जो वॉल्यूम डाउन है, ये जो, हाँ बस शॉर्ट कवरिंग है, लेकिन वीक है बस ये।
मतलब शॉर्ट में किसी को रश नहीं, आगे जाने में इंटरेस्ट है,
हाँ बस वही है, एग्जैक्टली
उसको ऐसे वॉल्यूम को इंटरप्रेट करना चाहिए ना।
एग्जैक्टली, बराबर।
मतलब मेरी समझ है वो ठीक है, वो मैं सोचता, मैं
करेक्ट
पूछना
है,
था।
करेक्ट है, बस करेक्ट है।
ओके, थैंक यू।
राइट, राइट। ओके, एनीबडी हैज एनी क्वेश्चन?
इसमें वीवेप ऐड कर सकते हैं सर?
हाँ, वीवैप मैंने नोट किया है सर, इसमें वीवैप ऐड हो जाएगा इसमें भी, और एक कहीं बताया था
डेली
लोगों
में
ने।
होगा तो अच्छा हो जाएगा।
हाँ,
और
कर देंगे
ये
वीवैप
ये
ऐड।
प्राइस परसेंटेज का कॉलम है, वो थोड़ा अलग हो जाए तो मेरा काम बन जाए, मेरा आधा 15-20 मिनट का सेट में बनता है।
हाँ, वो जरूर, वो पूरा बता दिया है मैंने। वीवैप ऐड हो जाएगा, ये पूरा सेपरेट हो जाएगा, कॉलम सेलेक्शन भी आ जाएगा
तो
इसमें।
मेरा एकदम अच्छा हो जाएगा, मतलब टाइम कम लगेगा वो सीट बनाने में।
ठीक है, जरूर जरूर।
इससे
ये
मैं क्या करता हूँ कि मैं एक्चुअल मतलब कॉन्ट्रैक्ट कितने इसमें लॉन्ग होते हैं और कितने शॉर्ट होते हैं,
अच्छा, ओके,
वो मैं निकालता हूँ, तो उसके बेस पे मैं ट्रेड लेता हूँ।
ठीक है
सर एक बार बटरफ्लाई चार्ट के बारे में बताओ सर।
हाँ, बटरफ्लाई, ठीक है।
सर इसमें हिस्टोरिकल निकाल सकते हैं क्या?
इसमें ऐड करना है, लेकिन इसमें हिस्टोरिकल इसलिए नहीं दिया है क्योंकि आपको हिस्टोरिकल ऑलरेडी अवेलेबल है यहाँ। ये
पर
पूरा का
डेवाइस
पूरा,
तो है,
पूरा
और
तो
है
device-
इसमें हिस्टोरिकल, आप मंथ चेंज कर दो तो पूरा नेक्स्ट वो चेंज हो जाएगा।
ओके।
एक्सपायरी चेंज कर दो आप,
हाँ, वो
मान लो
तो
जुलाई है, जुलाई
हाँ,
है
वो
चेंज कर दो
ओह,
तो वो हिस्टोरिकल मिल जाएगा।
ओके
हाँ,
ओके।
ठीक है। मैं देखता हूँ, सोचता हूँ इसके बारे में, मुझे पता नहीं इसमें हिस्टोरिकल ऐड करने से क्या होगा। ठीक है, मुझे सोचने दीजिए, मुझे एक बार देखना पड़ेगा।
श्रीकांत सर, डायरेक्ट फायरिंग करो ना ऑर्डर का यहाँ से सर,
सॉरी, यहाँ से ऑर्डर
फायर करने के लिए दे दो ना।
हाँ, वो बहुत बड़ा है सर, बहुत बड़ा
काम पेंडिंग होगा
चेंज
सर।
है, वो करना है सर को। उसका
सर
बहुत
उसमें कैसे
बहुत
बहुत
काम
इजी हो
होता है
जाएगा
सर
सर,
उसमें, तो वो करेंगे।
सर बहुत इजी हो जाएगा हमारे साथ ट्रेड करना,
राइट, करेंगे।
because sir
ठीक,
we are in Zerodha, we are in some other broker, they do not allow
हाँ,
us to do the fire for OTM buying, तो सर उसमें प्रॉब्लम आता है।
या
एंड यू कैन अंडरस्टैंड कि अगर आपके यहाँ से रहेगा तो हम डायरेक्ट यहाँ से फायरिंग करेंगे तो इजी जाएगा।
ओके, ठीक है, वो करेंगे सर, वो ऐड प्लान
जीरोधा
तो
में
है।
जाओ ही मत, जीरोधा ओटीएम नहीं बाय करने देता, फिर सेल
हाँ,
लग फंस जाते हैं।
हाँ, वो तो है,
ब्रोकर को चेंज कर दो।
ब्रोकर चेंज करना पड़ेगा। अरे नहीं, वैसे भी
बट सर
बाइंग
ब्रोकर
यहाँ से
सर ब्रोकर
ऑर्डर्स
चेंज करके भी सर वी कैन डू सिंक्रोनाइज विद द आई चैट ना, सो वी कैन फायर फ्रॉम द आई चैट आल्सो सर।
नो, दैट इज राइट, यू आर राइट अबाउट दैट। वी विल बी डूइंग दैट, तो प्लान तो है उसका, करेंगे वो आगे डेफिनेटली।
सर दे डू कंसीडर सम एपीआई और सब उससे कर देना सर,
हाँ,
कीज लेके सिगरेट कीज लेके।
राइट, करते हैं, तो करना है हमको, बस काम बहुत बड़ा है वो, तो हम लोग बहुत कुछ है करने का, तो करेंगे, प्लान तो है, करेंगे उसको।
सर जी
सर
और
सर
कैसा?
आज का सर
ठीक है,
डेटा से दिख रहा है कि निफ्टी इज इन करेक्शन, निफ्टी may turn in correction ना।
सॉरी, आई डिडंट
So this day chart, day-wise chart, means it's showing like a short covering is not a bullish, so it will give in a downtrend.
Yeah, I mean, this what it is showing that this is not a very strong move that is going on.
So it may get a correction anytime.
Yeah, it is possible. Actually, I look at these volumes also, and this thing is what is confusing me, because what I do is, this thing is telling me that it is very strong. Whatever these positive price changes are there, the volume changes are huge. So this is buying is huge actually. So I mean, this, if you see, it is going down. So many scripts are there where huge volume was there, and positive. I mean, these are positive. Only these are negative. So all these positive ones, so this is confusing. And even if I go historical, like, see, everywhere the volume has been high. I mean, going back,
So could be accumulation
big
phase.
volume buying was there, so I don't know what to think about it. So I'm
Sir,
confused.
accumulation phase, we can consider accumulation phase.
Maybe that is possible. That is possible. So I think next few days will tell us what happens here. Will tell us whether this buying is or up move is going to go on or not. So I think at least at the moment I'm not very bearish, because I feel that there is significant volume that is coming in. So I want to see how this gets resolved. The last few days, sorry.
After August short covering, there's a long build up, na? Mostly.
Yeah, we will have to see now if that happens. Yeah, if that happens, then yeah, this can continue further. We shouldn't get short build up now. That is what is the main thing. That is the thing. We'll see.
बिल्ट अप भी शॉर्ट बिल्ट अप भी वॉल्यूम के साथ आए तो ही देखना है।
हाँ बराबर है, वो तो वैलिडेशन वो करना ही पड़ेगा। अगर यहाँ शॉर्ट बिल्डअप दिख जाए लेकिन वॉल्यूम उसमें ना हो ज्यादा, तो फिर उसमें उतना सिग्निफिकेंट नहीं होता है। वैसे वो तो देखना ही पड़ेगा, बराबर। और इसमें यहाँ भी दिखेगा वो वॉल्यूम कैसे आ रहा है। अगर तो शॉर्ट बिल्डअप में वॉल्यूम
ये स्लाइड को थोड़ा समझा दो कि इसको कैसे लगते हो।
नहीं, बेसिकली ये तो मैं सिर्फ यही देखता हूँ कि यहाँ पे अब कोई भी नहीं, अगर मार्केट आई मीन पॉजिटिव में क्लोज हुआ है, तो यहाँ पे मैं आके देखता हूँ कि वो जो पूरे पॉजिटिव है यहाँ पे मैक्सिमम पॉजिटिव है क्या, और वो पॉजिटिव वॉल्यूम में वॉल्यूम कितना बड़ा है। ये जो वॉल्यूम है पिछले दिन के वॉल्यूम से कितना बड़ा है। तो ये देखिए, ये जो पूरे स्टॉक्स है वो तो 4 टाइम्स बड़ा है, 400% वॉल्यूम बड़ा है इसमें, ये स्टॉक्स में। और ये पॉजिटिव है, ये वाला नेगेटिव था, तो ये नेगेटिव है और ये वॉल्यूम जो है नेगेटिव में गया है। तो ये इसमें अगर ये ज्यादा पॉजिटिव हो, इसमें बहुत से ये यहाँ पे सिर्फ 4 नेगेटिव है, बाकी पूरे पॉजिटिव है और वॉल्यूम बहुत सारा वॉल्यूम है यहाँ पे, तो यानी कि ये पूरा पॉजिटिव है ओवरऑल। तो ये मैं देखता हूँ। तो अगर किसी दिन हाँ
सर, यू मीन टू से इफ्का इज इन शॉर्ट सेलिंग, शॉर्ट कर रहे हैं उसको, इफ्का को सेलिंग हो रही है, वॉल्यूम बढ़ रहा है और प्राइस कम हो तो सेलिंग हो रही है ना सर?
Yeah, this is very much negative actually, but these 4 are negative.
Yeah, even HDFC you say it's a selling only. Volume is increasing, but even selling is increasing.
Yeah, HDFC, AMC, yeah, this is actually volume has doubled actually since yesterday, and selling has happened. So this is a negative, definitely.
Bearish, yeah, it's bearish.
Yeah.
Okay.
सर जी, इसमें हम ऐड कर सकते हैं शॉर्ट बिल्डअप हो रहा है या लॉन्ग बिल्डअप हो रहा है, ऐड कॉलम कर सकते हैं।
इसमें भी मैंने बता दिया है, तो ये हाईलाइट हो जाएगा, शॉर्ट बिल्डअप लॉन्ग बिल्डअप इसमें भी ऐड हो जाएगा।
सर एक मैं बताऊं, ये मतलब हमारा इसमें जो रेगुलर ओआई का बिल्डअप होता है, मतलब कोई स्टॉक पकड़े हम लोग, तो उसमें रेगुलर जो ओआई बिल्डअप होता है 2% 3%, तो वो तो रेगुलर उसका एवरेज ओआई जो होता है, तो एवरेज ओआई से स्पाइक आया 10% का, तो वो कुछ ऐसा हो सकता है?
एक या 1 minute मैं I forgot one more thing. I was talking about price change and volume change. The big problem here is OI change actually. Even though prices have gone up, market काफी ऊपर गया है, ये पूरे सारे के सारे पॉजिटिव है और सारे के सारे बड़े वॉल्यूम्स हैं, लेकिन यहाँ पे OI जो है नेगेटिव है। So this is actually not a very strong picture actually. So that is there.
Short covering है।
Yeah, short covering है।
Bearish only.
Bearish से ज़्यादा, I mean this is yeah, I mean kind of
short covering है, नया ट्रेंड अभी नहीं है इसको।
हाँ, there is nothing significant that is conveyed here. I mean this I cannot say this is bearish, because the market has gone up and volume also has gone up, but the OI has gone down basically overall.
Which is the profit booking.
Yeah, exactly. Profit booking is
the profit booking हुआ होगा, we can
definitely profit booking हुआ होगा. Correct. So this is, I mean, this is not very positive. That is what is the whole picture is saying that. Yeah. हाँ, अभी कोई पूछ रहा था इसके बारे में और कुछ, क्या था वो?
श्रीकांत जी, बटरफ्लाई।
हाँ, बटरफ्लाई के जाते हैं, एक बार ये खत्म कर देते हैं फिर बटरफ्लाई।
श्रीकांत जी, can we see anywhere, मतलब all equity wise or index wise, total value traded in futures, equity and option for a particular underline?
See, equity data we don't have, so there is no, I mean, we can't provide that anyway. So for futures, probably we can do something like that, but yeah, currently it is not there. There is a kind of summary kind of report that we are working on. It is half done. It is being done. So Once that is done, we can talk more about that. But yeah, equity we don't have, so equity we can't add in this.
Okay, can we see this open interest for future versus option wise total traded value for particular for that day?
Yeah, that is not the, that is the one of the reports that we are working on that has a mix of futures and calls kind of thing. So once that is there, I mean, we'll be able to discuss
Okay,
more.
because
At the moment, it is not.
why it is required. So it will tell me ki how much is the contribution of volume either through options or through futures or through equity. So whoever is the major contributor, that will derive to that underline, right?
Yes, yes, very true.
So if we get this data, so it is very helpful to us.
I agree, and we are working on that. We are definitely working on the other than the equity part, obviously. At least options and futures will be providing that very soon. It is actually
Okay,
half
sir, till
done.
that, thank you, sir. Till the time you provide, thanks a lot. Can you guide us from any other portal or any other platform where we can check this?
I really don't know. The futures, equity, and options, I really don't know. Actually, I would have suggested, but I don't know if anybody is providing that. I really have no idea. Yeah, I have not.
Okay, no worry.
Okay.
Thank you.
Okay, I will quickly go because time is already up. So let me go to butterfly. Somebody had.
And I have one question in this. So,
yeah, tell me.
so in this, if we go to GSPL, can you go back to that, please?
Yeah.
So if you see in GSPL, volume is up 400%, but OI change is only 1% down. So can you say there's some long built up also in that? Or no, overall, you see the OI change is down?
Yeah, OI has gone down marginally, actually only 14 lots. So I don't know what to interpret. But
सर GSPL में अब Daywise Price OI में जाइए, उसमें ज़्यादा दिखेगा.
Yeah, I think we can. Yeah, we should check with this also. Because only then we'll know.
You see, the average OI change उसका ज़्यादा होगा. इसमें average OI 1% आया है तो.
OI change. Well, you could say that this is, you could say that this is bullish actually. Even though, where is that? This is in futures actually. This has, okay. I mean, what is this? Why has gone down here? Okay, this is combined OI. Okay, I got it. Combined. Anyway, you could say combined OI has gone up actually. So maybe it is bullish. Maybe it is bullish. If you see only for current expiry, it has gone down slightly, just 1%.
Okay.
So, but if you see combined OI, it has gone up by 4% actually. So this is, I would say, this is still bullish. This is still bullish. This is not bearish at the moment.
Okay, monthly OI is misleading.
Yeah, monthly OI is a little bit misleading. Yeah, and we are nearing to expiry. So monthly OI actually we shouldn't even be looking at it. So focus on combined OI only. So I think this is still bullish.
Okay, thank you, sir.
Okay. Now let us go to butterfly. This is the last one that we'll discuss because it's already 4:30. Yeah, what was the question about butterfly? Because this is similar to iron fly, iron condor that we have discussed. This will be very, very same. And this also you will have to, what you will have to do is, you'll have to keep it above the Keltner channel. Let me just quickly take an example over here. So this is 17,000, 300 points down, 16.4. Yeah, for this exactly same, you'll have to keep it above, like iron condor, you'll have to keep it above the band, Keltner band. And again, yeah.
So which one is preferable? Like we should use this Keltner or that strategy portfolio tracker chart, and which one should be better? Like while adjusting, we should see this, or we should just check the portfolio tracker one and just adjust if the price is moving outside the band and the profit. Which one should try?
See, these are totally different ways of adjusting. I mean, in this, what you are doing is you're following both price trend and the trend of the time decay. You are focusing only on trend here, and the trends are both price trend, price-based movement, and the time decay also. Because time decay also, this, even if price doesn't change, due to time decay also, this will keep going up. This will keep going up. So you are following the time decay and price decay. Price movement and time decay. When you are using this chart, whereas portfolio tracker is actually a completely different way of adjusting the position, because there you are focusing on where the price is, and if the price is moving out of the break-even range, then you are actually just increasing the range and then managing your risk. You are trying to get the current price within the range, and you're positioning yourself properly so you get the time decay. So you are not following any price trend as such, whereas here the difference is you are following price trend. So of course, technically speaking, this is basically a sideways position. You're talking about a butterfly, but when you are adjusting here, what you are doing is you are making the position bullish or bearish. When you adjust the position, you're changing your delta and making it bullish, and then following the trend of price. You're following the price trend, and doing that, finally you will get time decay also, because time decay also will add to this particular trend. So they are completely different ways. I wouldn't say I will not suggest either, because I have used both. I have traded both significantly. I mean, heavy trading I have done using only this chart, and I have done a lot of trading using the option payoff charts also. I like both, actually. I like both, because with chart, this particular chart, it's the simplicity. I mean, you don't have to worry about too many things, and I know from experience that this works. So I keep using this also for a few trades, mostly nifty trades. I use this a lot, and for bank nifty, I use this, but I focus mostly on payoff charts for bank nifty a lot, because it can move significantly. The range also is more, and the kind of adjustments I do, what I've explained in butterfly, the way it requires more bigger range, and then I can apply those adjustments very well over there for bank nifty. So I do both, basically. I like both, so I use both, basically. So difficult for me to suggest anything.
Okay, thanks, sir. And one more question, sir. For the iron condor, what is the distance of hedge you prefer?
As far as possible, beyond the straddle width would be better. Whatever is the current straddle width, if you are go really far, maybe less than 10 delta, actually. Less than 10 delta would be better. Yeah.
Okay, thank you.
Yeah. Okay. Any last questions in last 5 minutes, or I can stop? Anything else is there? Fine. Let me check if any chat is available. In chat, any questions have been asked. I'll just take those. I'm new to Biru is saying I'm new to this group as well in options. If you have overall brief of 5 minutes and suggest the sequence of videos to watch, and then move to okay. Yeah, very good question, one. Biru. This reply is for Biru. What you can do is a few of my check the recent 1 or 2 videos, not the most recent one, because that was totally focused on total PEC OI. 1 or 2 videos before that, like early July ones, you can watch, because I've told you, I've given like I explained the tools, like how to start once the market opens in the morning, which tool to pick up, and then how to determine the intraday trend, and then how to go about detecting reversals and all that. So watch early July videos a little bit, start with those. Any of those videos will do. Only the most recent one was very focused on total PEC UI. So I would, you can come to that later.
Right,
So,
because there are too many. So thought of, checking, because some of them are 2 years old, some of them are, very
yeah,
recent. So if there is any sequencing in terms of, this is a like one you can start with, something like that, the sequencing.
Yeah, you can start with the first week of July or second week of July. Any one of those you can pick up, and then you can start with those. That one video should probably explain everything that is required, actually.
Sure. Thank you.
Okay. There was a question by Ankush who said, sir, please explain once protective put and call strategy. Protective put. Ankush, I don't know what was that about. Protective put. You mean bull and call spread? Yeah, we couldn't discuss that. That also will be similar, actually. See, you can even go to this simple spread chart, and then you can do the same, which would be kind of a protective put and spread. If you take a look at, I mean, if you're looking at the same strikes, say call 16.5 long and 16.7. I don't know if Ankush is here, so you can even look at, sorry, this 16.7. I don't know what you mean by a protective put and call, but you can do the same here with a spread, and then you can keep adjusting the short strike or even the long strike also, and do it this way. So you can use the same concept. Actually, you need to keep this, since this is a debit spread. You need to keep the price above these bands. For credit spread, if you go credit spread, then you need to, if we take up credit spread, so this will be 16.5 and this will be 16.3. Now this you need to keep it below the bands. Now for a credit spread, this is a credit bull credit spread, so you need to keep the price below the band. So now that will be your aim, and if it goes above, then you need to adjust your stock short strike and get it below this again. So that was about that. I mean, I don't know if that answers your question. Okay. Next question, sir, are you going to post recording? Yeah, recording will be available by later today itself, so you can take a look and revise whatever you want. And again, fine, and those were the questions. So let me stop.